Good evening. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up for this Wednesday, the 9th of September, 2020. So in looking at the markets, interesting day. For those of you that subscribe to my morning futures, it was important, we have a combo offering that we do our SPDR ETF subscriber videos in the afternoon, and then in the morning I do the futures. Well, in the futures, I came out and I made one of my bolder statements. I was looking for a trading bottom today on the way down against the lower Bollinger Band. All three of the indices of the four that I've tracked did that. They hit it and they bounced away from it nicely. And I'm looking for the markets to stall on a little bit more of a rally towards the 18-day average of closes via futures. I mention that because it all comes into play as you look at these markets. So let's go right to the chart action. We know we have filled a gap on XLK right through here. There's still another gap here towards the 110 level. Don't know if that's going to be attempted to be filled or not. We'll see what happens. If you've watched the NASDAQ and you count the days recently of breaks, going much beyond 3 has been hard. And that's what you did, and now you've had your one-day rally. That does not mean you've bottomed in this market. What you have in the market right now in XLK is no trend. You have a higher high and a break low that took out a prior low. That is not a trend. That is what we call a vertical price drop. And now the question is, where's the bounce to? So if it bounces, I'm going to look for pretty stiff resistance at 119.02. And no, I am not saying sell the market. In fact, I don't see a signal at all. I see a market that's yet to tell us what it wants to do. When I look at other moving averages, the 100 and the 200 are way under the market. If the market were to drop right here, I'd look for Bollinger Band support at 110.85, and as I said, resistance 119.02. When we look at slow stochastics, you're oversold. So you have an oversold market that might want to reach down into that area, and if it tries to rally, I'm going to look for the resistance up here. But again, I don't see this market trending right now. In fact, I see most of these markets that we're going to look at out of trends, with the exception of the oil complex, but we'll get to that now. You've gone from an upper Bollinger Band to a lower Bollinger Band and held it. Yesterday, as you can see, you came down, hit this number. Today you went down, challenged it, and now you're getting your little bit of bounce. So actually, this day here was Friday. I wasn't here on that day. This was Tuesday's action. This is today's, and we'll see what tomorrow is going to offer. But you can see the lower Bollinger Band offering some of the support in an oversold market that is not trending. You have a vertical price break. It just went into a quick fall, and that happens when you get overextended markets or markets that I've never seen, like in August. In August, let's face it, that stock market, all these stock indices, it was every day higher. It became a joke. How high could Tesla go? It was suddenly worth more than everything. And I mean, I'm not saying Tesla's not a great company, but it's called, when you pierce that bubble at that moment, you get these kind of reactions. That's what you're always on the lookout for. Do I think people are now coming back into the market? I think on each of these breaks, if people have stepped in, over time they've done well. Until it doesn't work anymore, you might as well say it stays working. In the industrial sector, we're going sideways. It's pretty clear where you're at now. You're just caught in the beginning of what I call a pipe. It's when a market goes sideways and the Bollinger Bands just jump right out at you and they say, oh no, I'm going just sideways action here, and that's what I'd expect. So I'm expecting something of a churn here. As I said in the energies, I don't see that. I think the market defined itself with the pipe and is broken out to the downside, riding that lower with the embedded reading. And I think on each good rally here, I think you're going to find the pros selling until the red line closes back over 20. In other words, I think they'll keep going with the momentum trade. I don't necessarily look for this market to get very far from the lower Bollinger Band either. It just looks very bearish. If this is a top of duration, what are we going to? You're already back down to 33.53. Are we going to crack the 30 level? Could be what some of the traders are looking to see. In the NASDAQ, again, very swift 3-day break. You show me where you get more 3-day breaks like that. You don't. 1, 2, that's about it. Then you get a bounce. They're rare. That's the point that I'm trying to make for you. Go back and count them. And, you know, when you chart the way that I do, and it's what you do for your living, you start seeing these things, and I realize, okay, could it get down here to that lower Bollinger Band? No reason it can't. I'll be looking for resistance at 284.70, but I'm going to go flat out and say there's not a trend on that chart. It's oversold. The bias is down. Resistance 284.70, lower Bollinger Band support. The emerging markets tried the downside and couldn't stay under the lower Bollinger Band. I don't expect them to. Only 5% of the time do you do that. And where did it go? Right back to that 18-day average, that line in the sand, and it's just sitting here, not trending. Momentum trying to flip back to neutral to up even maybe. Resistance 65.99, but the first level of resistance right here at the 18-day average of closes. Gold market. Gold has lost, in my opinion, its way. The stock market rallied today and the market's going up in the gold. So what was that about? If you're looking for reasons, I don't know what they are, but as a chartist, I don't need reasons. I look at what the chart's saying, and the chart's got no picture. I have an overall lower low, higher high, sideways pattern right here. The good news for the gold bulls, if this turns out to be a pipe at this level, it can certainly support a challenge of the all-time highs if the market moves to the upside. In the gold miners, what we have now is a pattern of a lower low, higher high. Let's assume the market rallies. I look for a lot of resistance at 43. Let's assume it breaks. Why not just hang around the 41.45 level? Now, 2 of 3 elements came into play friendly today. You've got momentum pointing up because prices are over the 18-day average of closes. The bias is up, but you're not with a trend. In TLT, you have a pattern of higher lows and lower highs. What do you do with that? If you get under 162.45, maybe you're going to 161, the lower band. Take out 165.26 and don't take this out, then I wouldn't be surprised that you make a run to the 166.87 level. You're in the middle of no man's land right here. Last in the euro currency, why get involved in this in front of tomorrow morning's monetary policy statement from the European Central Bank, and then right after that we get the press conference with Ms. Lagarde, who will discuss a whole bevy of things. She's got to talk about inflation, the lack of it. She's going to have to talk about the funds available to fight the COVID. Brexit's right on the horizon. It's now 4 or 5 weeks away. The Brits are saying they will not make a deal under the terms that have been offered to them. Will Brussels come at the last minute, and will she be questioned on enough to give us an idea what this all means for the European Union and them? It's going to be an interesting conference. You want to watch it. It's generally broadcast on most of the financial TV stations. With that in mind, I want to remind you that one of the cool things that we do, like this morning, at 5:40 in the morning, I try to start recording my futures subscriber video. That is where I'm saying buy here, sell there. Not what I think the pros are doing, what I think you should be doing. Very big difference between that. Dollar risks where they're at. But when you combine it with my afternoon subscriber video for my Spider ETFs, the purpose is, this morning, I was giving very specific on looking for reasons to be covering shorts in all the indices. So if you had positions on in your Spider ETF and the stocks, and rather the futures were up sharply, remember the futures dictate what those are going to do. It's not the other way around typically. So if they went up, you might not reach down to the areas that you want. I cover all these areas in the spiders and in the futures markets. You get the combination of them is probably close to 80 charts now because I keep adding different charts to it. How do you get this? Well, it's really simple. Introductory price, $16.90. If you decide to stay with it, it's $28 every 30 days after that. These are a lot of videos each day. You get an awful lot. It doesn't just include that. My special reports are free to my subscribers, and attendance in my webinar, which we held our first one last month and I will hold one this month, is free to my subscribers as well. Other people that come into my webinars, and they're about an hour long, they pay an entrance fee. If they don't want to, they don't have to. But I think it's worth the time. You get to ask all the questions. I'll spill all the beans I know about and try to help you. So that's what the club, if you will, the subscription covers for you. To find out more, go to our website, www.iraepstein.com, under research. You have a good evening. I'll see you all tomorrow.